Traders, I'm on gold if you want to get over on gold. The beautiful thing about this system is we're using three types of market profile. We use more of a price-based market profile on this black chart, which are these dotted lines. All right, so more price-based on the dotted static lines, more volume-based on these solid control point, solid blue here, HVA solid red, LVA solid green. So on the black chart, we already had two times stacked area. You had the price overlapping within a couple ticks of volume control, price, HVA. Go over to the white chart. Look at the white chart, J signal. We have two profiles on there. We have HVA, which is developing in red, LVA, which is developing in green. It broke and retested right exactly on my developing profile. This is 3 times stacked profile. You will not get a better trade in this room than this setup right here. This is the top setup you're ever going to get in the room when you get 3 times profile stacked. You cannot forget this trade. This trade works on all markets. When you see this, you see the market react. This is when you fill the tick bucket up. 3 times area stacked is the best you're going to get. Now what we do is we have the volume, like I said, in a solid line, solid control, solid blue. Most volume that's been traded in crudes right there, stopped it to the exact tick. Price profiles, a dotted static line, and then developing over here on the white chart, which is J signal. Now when these line up within a couple ticks, we want to use market delta to pull us in. Now what happened up here at market delta, if you noticed, when it retraced back up to 1328 at this level, look at my negative market delta. Look how big negative market delta was. Negative 111. Anything over 50, I use a 4 Simrenko. I don't use anything but a 4 Simrenko on gold. Negative 111. Anything over 50 is a huge sell imbalance. So not only do I have 3 times area stacked on gold with 3 profiles, I get a negative 111. You do not get better than this. The market moved all the way down just above 23 from 27.20 fill. You should have got it filled live, 27.20 fill. Beautiful setup. Okay, that backed the old tick truck up on that one. That's how we trade it. This is a perfect alignment in the room. You want to look for this in all markets. 3 times profile. Now, I don't like you moving averages. Remember, we wanted sell retracements. We only use that magenta moving average for trend. You see the angle of it, it was down. So we're looking for sell retracements anyway. But one thing I want to tell you is I don't use moving averages for support and resistance, but they do work great once the 20 crossed to the 50, the first retracement to the 50. So it actually gave you 4 times confluent stacked. Stacked is 4 times confluent stacked. You just don't get better than that. That's how you trade the system. That's how you can get high reward to risk trades. All right, let's go over to crude real quick. I'm going to tell you on the crude trade over here. So I'll go over to crude. Crude started out with 2 times area stacked. If you look at 2 times area stacked here, and it had negative market delta, right? Negative market delta. But notice how negative the difference between crude and gold. I want to show you the difference so you understand. Look at the follow through we had on gold versus crude. You see the follow through on negative market delta all the way down, setting lower lows on these candles, lower low, lower low, lower low. Look how crude switched over. So if you got short crude, you made a few ticks, but that's it because market delta turned on you, didn't it? So don't hold this position. I know you look at the second bar to stop out, but take a few tick gain. You can reestablish if it does an M top to get short again if you want on negative market delta, okay, if you want to be conservative about it. But we want to see follow through like this on negative market delta. We want to see this. We want to see follow through. Even this last short on gold, I'll show you in a second. Big follow through. Go over to gold again, Gerald. Go over to gold. Look at gold right here. Look at gold. Look at gold. Here's the first Fibonacci, right? Here's the first Fibonacci. Here's the first Fibonacci dot, negative market delta. Look how the market retraced back up Look how it retraced back up, and we got the second push down with the second Fibonacci dot with negative market delta. That is a wave 3 and wave 5 pattern. That was a complete Elliott wave. So you really like to see that. This is the most ideal setup you're going to get in the room. 3 times market profile stack, and it went into an Elliott wave 3 and a 5 wave. Both waves were big waves. Both had negative market delta to bring us down. So the methodology is very simple. You log in. Very simple. Any market. I don't care what market you trade. S&P 500, 400, NASDAQ futures, Dow minis, Russell 2000, crude, gold, copper. Doesn't matter what you trade. You look at the magenta MA. It's built into our indicator already. If it's angled down, I want to sell retracements in stacked areas. I got 3 profiles I use. I use a volume profile, which are these solid lines, right? Control is blue, red is HVA, LVA is green. We sell high value area in downtrends. We never buy low value. We sell control also in downtrends. So the market retraced up to the control and the HVA and the LVA break retest over here on my white chart. That's 3 times area stacked. You simply wait for market delta to turn red. It was negative 111. If you look at it, here it is. There is your negative 111. Anything over 50 is a huge market delta, and look at that puppy. Lower low on candles all the way down. Then it retraces, gets another Fibonacci dot. Anything over 50 is a huge order imbalance. I teach you traders out on gold. Negative 68. See ya. Look at that. That was just a gorgeous trade. You cannot miss 3 times area stacked with trend. It's the best trade you're going to have in the trading room.